Good afternoon and welcome to Managerial Accounting. Today is day 4 for the fall semester 2022. Last class we did just a very brief introduction talking about job order costing versus process costing. And today we are going to pick up with chapter 16. So if you have not already done so, please go ahead and open your chapter 16 exercises so we can get started with those pretty quickly here. I do want to remind you that I will not be here next week, and so you do not need to physically come to class on campus. If it works better for you to, stick to your regular schedule, the computer lab will be open. You can come over here and do your work if it is easier for you that way, but there's nobody will be here taking attendance or anything like that. That being said, you will have work to do, and you can see on the syllabus, and I will include in the announcement after class today so that you're very aware of what I expect you to do while I am gone. So if you look at the syllabus, you can see, you can see that there are class days labeled as virtual class next week. And on Tuesday, then you should be planning to finish chapter 16. You can use the videos. I would encourage you to do that. Use the videos and do the exercises along with the videos. And then on Thursday, in place of class, you will be starting chapter 17. Again, I would encourage you to watch that first video. And I will include in the announcement how far that video goes or how many exercises are covered, so that if you choose not to use the videos, you'll still know which exercises I anticipate you will complete on your own. And then if you have questions on that, as always, you don't need to submit anything in CNOW for grading until you are done working on it. So if you have questions, and I'm not going to be able to answer those while I'm gone. If you have questions, you're welcome to email them, but you won't get a response from me almost certainly. You definitely will not be able to get into CNOW or into Brightspace. If you email and I can access my email, then I might be able to answer a question, but if it requires getting into one of these softwares, I definitely will not be able to do that. So if you run into difficulty, if you have a question on an exercise or a problem and you're just not getting it done, feel free to hold off on submitting. Do not hit the submit for grading if you're not done working on it. And when I get back on the 13th will be our next regular class. And when I get back, the first thing we'll do is talk about any of the questions that you have from what I have told you to cover in my absence. Does that make sense to everybody? Okay, so don't submit it if you're not done. If you have questions, just wait. Do as much as you can. Do the best you can, and then we'll answer any questions when I get back. Okay. So since I have this up, I might as well just talk from here about what is due then. Today is September 1st, believe it or not. So we finished chapter 1 on Tuesday, so you should be finishing up, not chapter 1, chapter 15, the first chapter. We finished chapter 15 on Tuesday, and so you should be working on the chapter 15 problem and be ready to submit that hopefully by the end of the day today. Also, if you haven't chosen a company for your annual report project, you should be posting that today as well to the discussion board in Brightspace. We actually started chapter 16 on Tuesday, but we are scheduled to start today. So you should be ready to submit the pre-quiz. Remember, you need to score a 60% or higher on that quiz to get credit. You have an unlimited number of attempts to get to that point. If you submit it with anything less than 60%, then you don't get any credit. And then next week, you'll finish chapter 16 and submit the exercises, and then submit the problem on Thursday. and start chapter 17 on Thursday, so that pre-quiz. So there's a lot piling up here. Hopefully people are staying on track with those due dates, even though we can be flexible. You definitely don't want to be getting behind. So before we jump into chapter 16 again, does anyone have any questions? Anything you need to say? Okay. So let's jump right into chapter 16. And I do not believe we did any of the exercises together, right? We did not start the exercises. Yeah, I didn't think so either. So, and that seemed to be what my note was indicating. So let's just take a look at this first exercise for chapter 16, just to get us started. So there's not anything new in this first exercise. There's not anything we haven't already covered. So this is really a review, refresher of how we calculate the flow of costs through those through the inventory accounts. So it might be easiest if we put some T accounts on the screen so we can track what's happening, record the information that we have here. So hopefully I'm making these big enough. Let's start with 3 inventory accounts, and I think that will be enough for us. So we have materials inventory. Now I know we did some review about how to use T accounts already in class, as far as knowing that the debit side is the left side and the credit side is the right side. And we reviewed normal balances and how we increase and decrease those. So at this point, I would not anticipate labeling the T accounts for you during class, but certainly if you do have a question about that, you should just let me know. So we know that the debit side is the left side and the credit side is the right side. We know that these 3 inventory accounts are all assets. Specifically, they are current assets for a manufacturing company. And since they are assets, then they increase on the debit side. So we have our sales and we have our gross profit given to us, the first 2 items there. So we can find our cost of goods sold because we already know the relationship between sales, cost of goods sold, and gross profit. You learned that in chapter 5 in financial accounting. So if sales minus cost of goods sold equals gross profit, then we can manipulate that equation to get cost of goods sold by itself, and we would have sales 12,375,000 minus gross profit 5,200,000. And so we can get our cost of goods sold that way, 7,175,000. So as far as doing, how does that calculation affect these inventory accounts? When we sell product, we move it off the inventory and move it out of finished goods specifically and move it into cost of goods sold. So I can go ahead and enter that cost of goods sold amount here as a credit to the finished goods inventory account. We would debit cost of goods sold, credit finished goods. Now let's go to our direct materials cost and let's see what we know about materials. So we have our materials right here. We have our materials inventory at the end of the period. So again, we know that these are assets, so that ending balance would be a debit balance. What else do we know that's materials? Let's see. We have our materials purchased of $4,125,000. Whoops. $4,125,000 that we added to that account. What we are trying to find is the cost of direct materials that we used during this period. We have to make a little bit of an assumption here. This $180,000 that they have for direct material, or sorry, excuse me, indirect materials, it does not tell us. It does not tell us of that 180,000. It doesn't tell us if that's amounts that were used, or, but I'm going to make that assumption. So they're not telling us that that's the indirect materials that they have on hand, but rather that's how much was used. So they used 180,000 right here. And so when that was used, we would have moved it out of the materials inventory and into, it's part of the overhead, but I'm going to move it into work in process as part of the overhead. What else are we told? Indirect labor was 410,000. So again, part of the overhead that gets added to work in process. Oh. Now our total manufacturing costs for the period were $7,880,000. We have other factory overhead of $810,000. So I'm going to add that other overheads. We've got the come on. So we have the other factory overhead of $810,000 that we're adding to work in process. So we have all of our overhead there. Let's go back. I think I've entered everything we can at this point. A line there to show that that's the ending balance. Let me make sure I've covered. Okay, so we've got all of that entered into our T accounts. So with our materials inventory, we're told this is their first year of operation. So what that means is we would have had 0 as our beginning balance for materials inventory. I can put that in. So a 0 beginning balance. We bought $4,125,000 worth of materials. 180,000 of those were used as indirect materials, and we finished with only 290,000. So we can find the amount that we used as, let me just put a, so the number we're trying to find here is how much we used of our materials as direct materials. That's letter B, direct materials cost. And so we would have moved that out of our inventory and into work in process. So that right there is the number that we are trying to find next. That's of these two that we have left, that's the one that we only have one missing piece. And so if we started with our purchase of $4,125,000, we used 180,000 of that as indirect materials, and then we had 290,000 left. How much must we have used as direct materials? So just to summarize, I'm going to round off 4 million minus the 180 that we used as indirect materials minus the 290 that we had left tells us that must be the direct materials that we used $3,655,000. Does everyone see where that came from? Anyone with questions on that? I'm fairly confident I have said this to you already in one of the or more of the other three, the first three classes, but frequently with the exercises, these are not realistic scenarios that we wouldn't know. We might, they might not know how much direct materials we used and that we have to kind of back into it. The reason that the textbook has these exercises, the reason I chose these exercises for us to do is because it helps you to think about where all of the pieces fit in. And you can recognize, wait, we know most of that, but not all of it. And, excuse me, the total manufacturing costs for the period then were given as $7,880,000. What that means is that's the amount that was added into work in process. So I can give myself a whole lot of room here, but I can put that number down here at the bottom as the total of all of the inputs. So that's 7,880,000. 780, yep. So that's how much was added into work in process. We already know how much was added for direct materials. We know how much was added for the overhead. And so the part we're trying to find last here, the very last piece, is how much was added here as direct labor. And so again, the calculation's fairly straightforward. We take the total cost, 7,880,000, and we subtract from that our direct materials and those three pieces that make up the overhead. And I got, if I did the math right, 2,825,000. And that is the missing amount, the amount that we haven't yet accounted for in the work in process account. So again, nothing.
Could you just go over that one time?
Where did I get that number? Yep. So looking at the work in process T account, we have the green box represents the direct materials that were added out of the materials inventory. The other three numbers here represent pieces of the overhead. So we're given indirect labor, indirect materials, and other factory overhead. So those three pieces combined make up the overhead that was added. And there are three costs that make up all products: direct materials, direct labor, and overhead. And we now know what two of the three were. And we know the total because that was given to us right here. And so if we know the total and we know two of the three, we can subtract those two to find out what the third one is, this empty box here. And that's where the 2,825,000 comes from. You're okay with that?
Yeah.
Okay. Anyone else with questions about that? Put my green check marks in there. Can you take a picture? Is that what you just said? Yeah, go ahead. Can you see it?
Yeah.
Mm-hmm. Okay. So let me get the marks off my screen. And I want to go to our PowerPoint just for a minute to talk about specifically how this applies in a job order costing system. So everything we've talked about up to this point, as far as the flow of cost through our inventory accounts, applies regardless of whether the company's using job order costing or process costing or some hybrid, some combination of the two. Remember, everything we're doing this semester is designed for internal users. And so we have a lot more flexibility in managerial accounting than we do in financial accounting, where we really have to follow GAAP. We have to follow those principles because we're sharing our financial statements literally with the world, and they need to be able to make sense of what we've done. What we're doing this semester, some of it contributes to those financial statements, some of it doesn't. Some of it is designed strictly for decision-making internally. And so we do have some flexibility about how we design our systems and the types of decisions we make. So everything we've talked about up to this point applies regardless of what type of cost system the company is using. And at this point, I want to talk just for a minute here about specifics related to the job order costing system. We had said last class that companies that use a job order costing system have a clearly defined beginning and end to their production process. So they know when they start working on a house, and they know when they've finished it and they sell it. They can trace costs specifically to that one product or batch of products. And so for each one of those products or batch of products that they're working on, and for some, for a smaller company, if you're a small contractor, you're probably only working on maybe one house at a time. If you are a large contractor, you might have dozens of houses in process, and you are tracking costs to each individual house. So a small company might have only one started. Each one of those jobs, whether it's 1 or 100 jobs in process at any given time, has its own separate subsidiary ledger, sub meaning under. So it comes under the general ledger that gives the detail about that job. And so if I, whoops, sorry, let me just go down. So this is an example of what that might look like. This company is using a job order costing system. You can see that in their materials inventory, they have one materials account, but then they keep track of separately how much do we have of each one of the materials. Now, every company's doing that, right? Just to a greater or lesser extent. They might only count once a month or even once a quarter or once a year to verify their inventory. But work in process is where we see a very big difference. So all manufacturing companies have at least one work in process account. Job order costing, companies using job order costing have only one work in process inventory account, and that's what I refer to as the master account, or you can see here they have it labeled as the controlling or the control account. That work in process account that appears in the general ledger is the total of all the jobs that are in process at any given time. But then they have the separate card. Now, in 2022, they're probably not paper index cards like we might have used, like they might have used decades ago. But within our accounting records, there's still a separate location for each one of those jobs where we can look at, for example, job 71, and we can see how much direct materials have been assigned to job 71, how much direct labor has been input to job 71, how much overhead has been allocated to job 71. And then we can do the same thing for job 72. This company has just 2 jobs in process right now. So it might be a somewhat small company. If you look on their general ledger at the work in process account, you see the total for job 71 and 72. But then you can dive into the detail in that subsidiary ledger and see how much of this is for 71, how much is for 72. You can also see in their finished goods account that they still have separate accounting, separate cards, if you will, for the 2 jobs that they have finished but have not yet sold. And that would be job 69 and 70. So job order cost using company has just one work in process account that's the master or the controlling account, and it's the summary of all of the work that's in process right now. You can see the detail for each job on the individual card. So I'm going to ask you to make sure you read through in the textbook the terminology that's on these slides. I don't really feel the need to talk about the specific, the names of the documents where we request materials, where we order materials, but you should at least be familiar with those. So please make sure you read through those in the textbook. I'm more interested in using our class time to talk about how we accomplish this in our accounting records, what needs to be in there and how it gets there. So just as an example, you can see there how they've calculated the direct labor that gets applied to each job, because the workers, the direct labor workers are actually keeping track of the time that they spend on each job, and they may have, they likely have some time that's unassigned, where maybe they're cleaning up their area or performing routine maintenance or preventative maintenance on their machines and things like that. Maybe they're engaging in training, and so that's indirect labor, but they very carefully keep track of the direct labor that gets assigned to a job. So for example, because we are living in a much more high-tech world, a company in Wellsville, New York, I'm not suggesting this is the only one that does it, but their direct labor people actually scan a barcode that is associated with each job. So if they were working on one job for a couple hours in the morning, when they start that job, they scan the barcode for that job. They scan that they're working on that job, and when they finish, they basically clock out of that job. And then maybe they have some indirect time while they clean up or do maintenance, and then they clock into the next job they're working on. So it very much is tracked job by job, so that they know, as we said last time, why do they need to know that? Well, they need to know how much to charge their customer. They need to know how profitable a job was. So if they don't know how much time each job takes, then they don't know whether they've made money on that job. Then if another opportunity comes along to make that same particular product, because this is a company that makes customized products. So if there's an opportunity to make exactly that same product again, they don't know how much it cost them to make it the first time. So it really is important that they have that individual tracking to their specific jobs, because of the nature, the customized nature of the work that they do. With that, let's move to our next exercise, because we're not quite to factory overhead yet. So let's go to our next exercise. Make that a little smaller to make it fit on the screen here. I guess that's the best I can do. So we have an incomplete subsidiary ledger of materials inventory for May. And those terms that I just went through very quickly, it didn't talk about them, but I asked you to make sure you read them in the textbook. Those terms are included here. So we have material coming in that we've ordered or issued a purchase order to our suppliers. That material comes into our receiving. Of course, we would inspect it, make sure it meets our quality specifications. We would count it to make sure what's on the receiving report matches what was ordered and what was invoiced. So all of that matching up is very important from an accounting perspective, to make sure that we receive everything that we ordered, that we're only paying for what we ordered and what we received. And so you can see the receiving report shows two different receipts, 130 units and then 110 units. You'll notice we're in a period of rising prices. So the price at the beginning of this period, the first order was $32 per unit, and then it went up to $38 during that period. At the top, if we read the title of this exercise, cost of materials issuance under the FIFO method. So FIFO hopefully sounds familiar to you from chapter 6 in financial accounting, when we talked about inventory valuation methods. So for us, in this chapter, we're now talking about not the whole product, but just one material that goes into the product. This company still could choose to use a LIFO or average cost, but they're using FIFO. FIFO stands for first in, first out. You can see if you look at the balance over here, the far right columns, as of the beginning of the month, May 1st, they had 285 units of whatever this material is. They had 285 on hand, and those units had a cost of $30 per unit. This final column is referred to as the extension. So we multiply the units by the unit price to get the total value in our beginning inventory. So on May 4th, when we receive the additional 130 units, we need to keep both of those what are called LIFO layers in our inventory. So we still have the $30 units, 285 of those from the beginning inventory, and we've added to that 32 additional units. No, sorry, 130 additional units at $32 each. We need to keep those separate. Again, those are referred to as the LIFO layers. We need to keep those separate, and we need to keep them in chronological order so that the older units appear first, because under FIFO, first in, first out, those are the units we're going to use up first. So our ending inventory as of May 4th, our inventory includes the $32 units we just bought and the $30 units that we already had on hand. Make sense? So what happened next? Now we're actually going to do some work. Apparently, we're actually going to use up some of these materials. In our accounting records then, thinking about the flow of cost through those inventory accounts as we've been talking, the materials that we're using will be moved out of the materials inventory and into, where does it go? We move it out of materials, where does it go?
Work in process.
It is work in process. So we're moving this out of materials and into work in process. We're not showing on this subsidiary ledger that actual movement. We're just going to show what's left. So this middle column shows how much we're removing, and the end column will show what's left. So we're not doing the journal entry at this point. When we get down to letter C, we're going to do a combined journal entry for the month. So we request the people out on the shop floor, the actual people doing the work, said, hey, we need 365 units of that material. Could you send it out? And so we do that. And so what did we have left? Well, as of May 4th, we had 285 plus 130. We had a total of 415 units. They just requested to put into production 365 units. So how many units will we have left? 50. 415 that we had available, minus the 365 that we just put into production, we have 50 left. The question, just like in chapter 6, the question isn't how many units we have left. The question is, how much do we say those units are worth? So if we're using a FIFO system, the first ones we use up, the first ones we send out to the shop are the $30 ones, right? So we're going to send all 285 of those $30 ones. And then they still needed 80 more. So we send 80 of the $32 ones, leaving us with just 50 of the $32 ones. Extension there, $1,600. And so the amount that we actually moved out would be all 285 of the $30 ones, or $8,550, plus 80 of the $32 ones. And so the total requisition was for $11,110. Make sense? Anybody with questions so far? Okay. So now the people who are in charge of our inventory control look at this and say, "Ooh, we only have 50 units left. I guess we better order some more." And they order 110. Maybe they only ordered 110 because the price is going up so much and they want to make sure that they can afford it. Maybe this is a material that they don't use very much, this time of year. I don't know. But for whatever reason, we ordered only 110. And so now in our inventory, again, we just like on May 4th, we need to keep the layers separate. So we have still the 50 units at $32, and now we have an additional 110 units that cost us $38. So we now have a total of 160 units on hand at $32 and $38. And we get a requisition from the manufacturing floor saying, hey, send us another 100 units. Under the FIFO method, which units do we send? We first send the oldest one, the 50, yeah. We first send the 50 at $32, but they requested 100, so we're going to send another 50 out of the $38 ones. And that leaves us with 60 at $38. And how much the total dollar amount that went into production would be the $1,600 that we had of the $32 ones, and then 50 more units at $38 for a total of $2,060. Did I do that math right? Let me try that math again. I think I may have 1,600 plus 50 times 38. No, I definitely did not do that math right. This should be 3050. 50 units at $32 and 50 units at $38. They're $3,050. Sorry, I can't type. $3,500. That's a typo. 3,500. Need to type what's actually showing on my calculator. Everybody good at this point? Okay. So from what you can see on the screen, what is the materials inventory balance in dollars at the end of May? 2280. Yep. How many units do we have? 60. In letter C, we are journalizing the summary entry to transfer materials to work in process. So we already explained that these 365 units on May 10th and these 100 units on May 27th were moved into work in process. So we're going to move them out of the materials inventory. So we're going to credit materials and debit work in process. I think this is the first journal entry we've done this semester. Is that correct? We haven't done another journal entry, have we? Yeah, I don't think so either. So I told you on day one, I would review whatever you would need to know specifically from from financial accounting. So I just want to show you this. In Brightspace, in the reference materials area, right at the top is a picture. Let me actually change this to preview so it looks just like it will for you. So if I go to the reference materials folder, right at the very top is a link that says required form for a journal entry. So that's where I'm going. Make this a little bigger so you can see it. So what's in this yellow box is what is needed for a journal entry. Three basic parts. We have the date. We have the account titles. Every transaction must affect at least two accounts. There has to be at least one that's debited and one that's credited. The debited accounts are always listed first, and then the credited accounts are listed after any debited accounts, and you can see here that it's indented. Then we have the dollar amounts. Now, if there's just one debited and one credited account, that's called a simple transaction, simple journal entry. One debit, one credit, equal dollars. If there's more than one debited account and or more than one credited account, so we have more than two accounts total, you still list all the debited accounts followed by all the credited accounts. Each one is going to have its own dollar amount, debited or credited. And when we finish, we need to add up of the dollars that are debited and the dollars that are credited and make sure that they're equal. It's really easy to tell when it's a simple transaction, we just have one of each. If it's a compound transaction and there's more than one of debits and or credits, always make sure you add them together, add up the debits, add up the credits, and make sure they're equal. So this is our basic form for a journal entry, and it is right here in the reference materials if you need to look at it later. As we go back to this exercise, letter C, we're moving dollar amount out of materials, so that's going to be the credit, and into work in process, so that's going to be the debit. The software normally is very helpful for us in that when there are multiple, let's say there's more than one debit, in this drop-down box that shows the account titles, it would only give you the option. It kind of forces you to put them in the order that it wants them. So there isn't really a wrong order. If you have 3 debits and 3 credits, there isn't really a wrong order for the 3 debited accounts. The debits have to be before the credits, but it doesn't matter which order you write those 3 debited accounts. But the software really doesn't allow you to put them in the wrong order because it will only give you one of the options at a time, if that makes sense. If I had chosen materials here and work in process here, it's going to mark it wrong, even if I put the right dollar amount in the debit box. So let's see what that dollar amount is. 3,500 was transferred on May 27th and 11,110 on May 10th. So the total is 14,610. So if I did it like this and put the credited account first, it should mark that as incorrect because the debit needs to be before the credit. I'm just going to check that. Yeah, so it did mark it wrong. I have all of the right elements, but they're in the wrong order. So I'm going to switch those around. Okay. And put them in the correct order. You also hopefully will notice that as soon as you start writing a dollar amount in that credit column, in the credit box, the software indents it for you. So I think that's really neat and helpful that it does that for you. But please make sure that you keep in mind if you were handwriting a journal entry, which could happen in a real world situation, even though it's going to end up in a computer, if you aren't the clerk, if you are at a higher level function, it may be that you write the journal entry and you hand it off to someone who's in charge of bookkeeping, who's in charge of entering that information into the system. The 14,610, yep. So what we're entering here is the amount that was moved out of materials into work in process. We moved materials twice, once here on May 10th, and then another time here on May 27th. So I simply added together the dollar amount that we moved on May 10th and May 27th. Make sense? Okay, so any other questions about that? So you should be familiar with how to write a journal entry. Now, if we were really putting this in, there'd be a date here. What was this, May? Yeah, so but if they only do summary entries once a month, it would say May 31st, and then the entry. Okay, so our last question, comparing blank as reported in the materials ledger with predetermined order points would enable management to order materials before a blank causes idle time. So comparing quantities with some predetermined order point would allow them to avoid a lack of materials. And let me just give you a little bit more information about what that means. So we can see here at the end of May, they're down to just 60 units. On May 10th, they were down to just 50 units. Beginning of the month, they had 285 on hand. So the idea of a predetermined or preset order point means that it's built into our system that if our inventory falls below a certain level, it triggers an order. And so on May 10th, when they requested 365 units and our inventory fell to 50 units, if we're using that technique, then it automatically triggers an order. And there's almost always going to be some kind of human intervention on that to approve it, even if it's just more like a rubber stamp, because you don't want orders going out for material that's, say, being discontinued. Or as I said earlier, maybe it's a seasonal kind of thing and we don't really use this in the winter and it's already, or maybe we don't use it in the summer and it's already May. So the idea of having those trigger points means that at least it's drawing someone's attention to, hey, we're running out of this. Don't we need some more? So that the order gets placed, because otherwise what would happen? If that order hadn't been placed and received on May 21st, then on May 27th, when the shop asks for 100 more units, we say, ooh, we've got 50. Let's place an order. And maybe it takes weeks or sometimes even months of lead time to get that material to us. We want to make sure we have it on hand when we need it. Although later in the semester, we'll be talking about some other inventory related issues that we don't have too much inventory on time or on hand, excuse me, so that we are tying up our money, tying up our working capital in that inventory. So it's kind of an art form to know how to have just the right amount of material on hand when you need it, so that you don't run out and have a stoppage. At the same time, you don't have so much that it's spoiling, getting lost or stolen, getting, being discontinued because it's obsolete, or at a minimum, having your, like I said, working capital tied up in inventory. Okay, anything else you want to talk about from this exercise? We'll keep going then. So as we already said, what makes job order costing different from process costing is we are tracing costs for direct materials, direct labor, and then allocating overhead to specific jobs. And so in our next exercise here, in exercise 3, we are doing more entries for materials Kingsford Furnishings Company manufactures designer furniture. They use a job order costing system, which means they have a clearly defined beginning and end to the product, to the process, that they can trace cost to a specific cost object, such as one set of furniture or one batch of furniture, one particular custom designed piece or whatever it is that they make. We have the balances on April 1st at the top there, and then we're also told how much was purchased during the month for each one of the 4 materials that are used to make this designer furniture. There's a note down here, glue is not a significant cost, so it is treated as indirect materials. And we talked about that a little bit last week, that even though maybe they can actually measure and actually trace the amount of glue that's used, if it's a small cost, it doesn't make sense to do a separate entry and keep track of a separate product. And so we're told here that the glue becomes part of overhead and then gets allocated to the product. So we can see here materials that were requisitioned to individual jobs, numbered by job 601, 602, 603, how much of each of the 3 direct materials was used. And then we can see the quantity of the indirect material that was used and would end up being allocated to the product. As we finish up each one of these jobs, 601, so we have the direct materials now of 374,700. Assuming that job were done, it would also have included on that cost card the direct labor and how much of the overhead was being assigned or allocated to that specific job. The first thing we're asked to do is journalize the entry to record the purchase of materials in April. So here we are given 4 separate materials and how much was purchased. So we just need to add those together to find out the total dollar amount. This is a summary entry that we're doing. And so the total I got was $1,770,000. Again, notice as soon as I start typing a number in that credit box, it automatically indents. So when we purchase the materials, we add them to the materials inventory. And it doesn't say how we purchase them. So I don't know for sure. I'm going to guess if we spent $1.8 million, we probably have an account with our suppliers. And so I'm going to add it to accounts payable, that liability. But it doesn't really say, so I guess the answer could be cash. I don't think that's likely, given the dollar amount that's involved there. So I'm going to use accounts payable. Okay. The next part B says, journalize the entry to record the requisition of materials in April. So the materials that were moved out of the materials inventory account into work in process. We have the totals here by job for the direct materials, and then we have 83,600 for indirect materials. The indirect materials are going to be moved into factory overhead. $83,600 moving into factory overhead. The direct materials are going to move into work in process. And again, I have to do a little bit of math here to add up the 3. So I don't have to add up each one individually. I'm just going to add up the total by job. And if I did my math right, $1,664,000 worth of direct materials that get moved out of the materials inventory into work in process. combine that with the indirect materials. And that's how much is moved in total out of the materials inventory. Most of it is direct materials and gets added directly to work in process. But the glue has to take an additional step, and it goes to factory overhead first. Eventually, it will become part of the cost of the product as well. And later in this chapter, we'll see how we do that.
So how did you get that number again?
Which one? The 1,747,600? I added up the total for the direct materials and then the glue from the indirect materials. And hopefully I added the direct materials right. Got it?
Thanks.
Okay. The last step then is to find the ending balance for each one of these 4 materials. So we'll start with fabric, and I'll just put this on the screen so it's a little bit clearer where I'm getting these from. So for the fabric, we start with the beginning balance, which was 58,300. We add to that the amount that was purchased during the period, which is the next little table down. We purchased $820,000 worth of fabric. And then how much did we use? And I've got it just a little bit scrolled off the screen, but I think that says 810,000 under the fabric column right here. So I think that's 810,000 total. So we start with our beginning balance, 58,300, add to it the purchases, and subtract from it the usage. And that should give us the ending balance. And I got 68,300. Whoops, an extra digit in there. 68,300. Everyone okay with where that came from? If you are, go ahead and try the other ones. I'm going to put mine on the screen, but I would ask that you don't look at what I'm putting on the screen until you've tried it on your own. I'm going to put mine on the screen, and then we can talk about it if you have questions, of course. Excuse me. Okay, so I have on the screen all of those calculations, and hopefully you were able to duplicate those as well. I'll put my green check marks in there, and we will keep going. And so we've just seen how we can trace those direct materials costs, and we saw that the one material they identified, glue, as not being worth it. So in accounting terms, if something is not large enough to matter, can't remember if we've used this word yet this semester. So if it's large enough to matter, we would say it is material. And generally our threshold for material is that it is at least 5% of the total. So if something is less than 5% of the total, it's probably not big enough that it would make a decision maker reach a different conclusion or make a different decision about our company. And so the glue in that previous example compared to the other products was a small dollar amount. He said it's not worth it for us to try to track that separately to individual jobs. And so we're just going to throw it into overhead. We don't ignore it. It still becomes part of the cost of the product, but we don't trace it directly to the specific product, and that's okay. So just like we can do that with our detailed direct materials, we can do the same thing with our direct labor, and that's what's going to be the subject, the purpose of this next exercise. Entry for factory labor costs. We have weekly time tickets. We have 3 employees, Tom, David, and Jose. And for each of the 3, they have, as we already mentioned, they've been tracking their time spent on each one of those jobs that we had in process. And they also each have 1 or 2 hours of their time in this final right-hand column that was spent on something other than direct labor. So this process improvement becomes part of the indirect labor. It might be very critical to the running of our operation, but because it benefits maybe all of the operation or all of our jobs, we don't trace to a specific job. The direct labor rate earned per hour by the 3 employees is given there. The process improvement category includes training, quality improvement, and other indirect tasks. I mentioned it could include things like cleanup and maintenance, transporting of materials, and so on. We're asked to journalize the entry to record the factory labor costs for the week. And if an amount box does not require an entry, leave it blank. So I'm just going to do a little bit of math here on the screen before we move on. And I'm trying to position this so that you can see everything on the screen at once to give me enough room that I don't have to scroll up and down and lose some of that information. So the first thing I want to do is add up the total hours for each one of these employees. And it could be that they're all 40. Don't know. Looks like it. And so each one of them is working a total of 40 hours during the week. But for Tom and David, 38 of their hours are direct labor, and for Jose, only 39 of his hours are direct. And the other 2 and 1, respectively, are indirect labor. So for Tom, then, at 32 hours, he has, or $32 per hour, excuse me, he has 38 hours of direct labor. Or 1,216. And then his indirect labor would be 2 hours at $32. $64 worth of indirect labor. For David, again, his direct labor is also 38 hours. He spent 2 hours on the process improvement stuff. Total of $1,368 for the direct labor. And $72 for indirect labor. And finally, for Jose, 39 hours were spent, were spent on direct labor tasks that can be traced directly to a specific job. Or $1,092. And then just 1 hour of indirect. And so once we have those totals, we can go about entering the journal entry. We know that the direct labor is going to be traced directly to work in process. So I'm going to add up those 3 direct labor pieces, 1216, 1368, and $1,092. So that's the direct labor that we have detailed right here. And then for the indirect labor, we know that that is going to be assigned to factory overhead, and then eventually we will allocate that to the product. So it does become part of the cost of the product eventually, but it just has a separate stop along the way in the factory overhead account. But all of it shows up in their paycheck. And so the total for wages payable is the combined total of the direct and indirect labor for that period, for that week. Everybody good up to that point? So letter B says, assume that jobs 301 and 302 were completed but not sold during the week. So once they're completed, we move them out of work in process into finished goods. And then once we sell them, we move them out of finished goods into cost of goods sold. So 301 and 302 are sitting in finished goods at the end of the week. And 303, it says remained incomplete. So it's the incomplete 303 is still in work in process. So the question we're asked then is, how would the direct labor costs for all 3 jobs be reflected on the financial statements at the end of the week? The direct labor cost for the completed jobs would be part of finished goods. And the direct labor cost for job 303 would remain in work in process. So hopefully at this point, you're getting pretty comfortable with the flow of costs through the inventory records. And specifically in this chapter, we're talking about job order costing, where they might have separate jobs going on at the same time that are tracked separately on the subsidiary ledger cards, but there's also that control or master account that includes the totals. So at any given time, all the jobs we have open or in process, if we add up the totals that have been assigned to those jobs, it must be equal to the control or the master account that appears on our financial statements. Those subsidiary ledger cards just provide the detail for each job. Okay. Anybody questions? So direct labor, direct materials, we've seen both of those now and how they are assigned directly to the specific job, how they move from materials or from wages directly into work in process. The last component that makes up our product cost, though, is factory overhead. And we've been talking about that being treated very differently because it is all accumulated in a separate cost account. And then through the process that we're about to cover, through that allocation process, it gets moved onto the job. It does get assigned, it does get moved into work in process, but not directly. And hence why we call those indirect costs or overhead factory, or sometimes it's called the factory burden or factory overhead or manufacturing overhead. All part of the cost of the product, but we can't assign it, we can't trace it directly to a specific product. There is a page in Brightspace, and I'll show you that page in just a moment once I exit this PowerPoint, but there is a page in Brightspace that summarizes what we're about to talk about here. How do we do the allocation of those overhead costs? What we are going to be doing is referred to as the traditional approach, and I think that's the title of the page I have in the reference materials in Brightspace, traditional approach to allocating overhead. In an upcoming chapter, in a couple weeks, we'll talk about a more complicated way of doing it, but that more complicated way of doing what we're doing here gives us a better handle on our costs. So we've already talked about why it's important that we know what our costs are, so we can set the appropriate price for our customers, so that we can make sure that we are making an appropriate profit. So it really is important that we recognize and understand what our costs for making a product truly are. The traditional approach is the easiest approach because it treats all overhead the same. We have that one cost pool. We identify one cost driver, or what they refer to on this page as the activity base or allocation base or activity driver. But in a nutshell, the traditional approach says all overhead is the same. We're going to allocate it using one tool, one calculation. In chapter 18, we will talk about an approach called activity-based costing, where we don't look at overhead all as one big lump sum, but instead we break it up into the actual more detailed sources and deal with it separately. You can see at the bottom of this screen, they've identified for us 3 common activity-based or cost drivers. Any one of these is perfectly acceptable. There are likely other ones as well. For our purpose in class, the exercises we do, the problem will specify which cost driver to use. It really is a management decision. So there's not just one way to do this. There's not just one right answer. But again, for our purposes, we'll be using one of these, and each exercise will specify which one to use. The company, in a real world situation, a company is going to decide which one gives them the best understanding of what's making their costs happen. In other words, what's driving those costs. That's why it's called an activity driver or cost driver. We think, for example, if we're using direct labor hours, we would use that because we think that that's a good way of apportioning or dividing up the overhead costs, that products that take more direct labor hours also need more of the overhead assigned, and products that take fewer direct labor hours should have less of the overhead assigned. Again, I have this calculation for you already in Blackboard, kind of a summary page, but certainly you can make a note of this calculation, this formula if you'd like. We're going to be using it in our next exercise. So there's really a 3-step process to the allocation of overhead. And the first step happens, if you think about that management cycle, the first step happens in that planning phase. when we're deciding, when we're doing budgeting, when we're projecting what's going to happen in the future, the upcoming period, whether it's month, quarter, year. This is probably not done on anything more regular than an annual basis. So I don't want to imply that they're changing this rate every month. That's probably not happening. They certainly could review it more frequently if they think that something may have substantially changed. So right now, when we see inflation, in the 8 to 9% range, companies very well might be going back and reviewing what they had expected or projected or budgeted for this year to say, maybe we should be changing that. But other than that, probably reviewing this once a year is probably all that's needed, unless we see some substantial and unplanned changes in our cost structure. So during the budgeting period, the planning phase of the management cycle, we calculate the predetermined factory overhead rate based on what we have in the budget. So the total factory overhead costs in the budget divided by the estimated activity base. So let's again just say we're using direct labor hours, which is one of those three that was given on the previous slide. So if we're using direct labor hours as our activity base, then we would take the total dollars we budgeted for overhead and divide by the total number of direct labor hours we put in the budget. Okay. Step one happens strictly in the budgeting time, in the planning phase. And there's an example. So they had budgeted $50,000 for overhead, and they're using direct labor hours. They expect to have 10,000 of those direct labor hours. And so our predetermined or our budgeted overhead rate, $5 per direct labor hour. So keep in mind what goes in there in case you're looking at that saying, well, how can you pay someone $5 an hour? That's not at all what we're talking about here. This is not how much we're paying our workers. This is the total cost of those overhead categories: utilities, supervision, the plant manager, those indirect materials like glue that we saw in that earlier exercise. When we add all of those together, that's the $50,000. And then we divide that by the number of direct labor hours that we're going to have. So there really is no connection between the $5 per direct labor hour and the pay that our workers are getting. Okay. So that's step one, figuring out how much we're going to apply based on our budget. Step two happens while we're actually making the product, that performing phase. When we're actually making the product, we're assigning the direct labor and direct materials costs directly to the product, and then we're applying overhead. So in this example, when we're using direct labor hours for our cost driver or activity base, every time we record payroll, we would look at, well, how many direct labor hours did we just assign? Did we just did we just apply to the job order cost cards? Based on those hours, we would also apply overhead. So you can see here, for example, job 71 had 350 direct labor hours traced to it. And so when we multiply that by our predetermined overhead rate of $5 per hour, $1,750 worth of overhead is also applied to the job based on the number of hours that were worked. A job like job 72 that has more hours, it has 500 hours, would also get more overhead, $2,500 applied. Okay, so that's step two. Step one, figure out from the budget how much we're going to apply. Step two is when we're actually making the product, we apply overhead based on the actual level of the cost driver, in this case, the actual hours worked, times that budgeted per hour cost. In our example, $5 per hour. The next step then is to actually, hang on, I want to go back up to that slide. The third step, I said this is a 3-step process. The third step is to reconcile the difference. So since our application of overhead was based on the budget, and since we're almost certainly not perfect at budgeting, there is almost certainly going to be a difference between what we applied and the overhead we actually incurred. And so at the end of the process, we need to reconcile that. We need to make sure we've applied all of the overhead that we incurred and no extra. So step 3 happens at the end of the process in that controlling phase when we are checking our work basically and making any necessary adjustments. And we'll see that in our next exercise. So first, I want to show you in Brightspace. It's way too big right now. So in Brightspace, if I go to the reference materials folder for this specific chapter, close up chapter 15. So in the chapter 16 folder, there's a page called Traditional Approach to Overhead Allocation. And it's a whole lot of words, but I describe in these words, step 1, step 2, and step 3. So how do we calculate the application rate? How do we actually apply it? And then how do we reconcile that at the end? So if you need a refresher or a review on how we do that, you can come to this page in the Brightspace reference materials for chapter 16. And let's go to our next exercise, exercise 5, to see how we actually do this, okay? Any questions though before we start this next exercise? I'm going to make it a little bigger so we can see from the back of the room. Everybody okay so far? Eclipse Solar Company operates 2 factories, creatively named Factory 1 and Factory 2. The company applies factory overhead to jobs on the basis of machine hours. So they have identified machine hours as their activity base, their cost driver, whatever you want to call it. I normally call it the cost driver. It's just what I'm more comfortable using. So machine hours in Factory 1 and direct labor hours in Factory 2. Might seem weird, same company, 2 different factories, they're using 2 different activity bases, but remember, we said it really is up to them how they decide to allocate the cost. The total cost remains the same, and the total cost ends up getting applied to the product, regardless of which cost basis they choose to use or which cost driver they choose to use. It might just get divided differently among the products that are made at each factory. And so they may have decided it gives them a better understanding of where their costs are coming from to use machine hours at Factory 1, direct labor hours at Factory 2. It's totally up to them. It doesn't change the total cost of the product. All it does is change how we're dividing it up. Letter A says, and we'll come back to what the information in the table. Letter A says, determine the factory overhead rate for Factory 1. So remember, this is done in the budgeting period or the planning phase. So it's all based on budgets or estimates. For Factory 1, they're using machine hours. So we take the total estimated cost for overhead, in this case, $18,500,000. So for Factory 1, whoops, there we go. Step 1 is to take the budgeted overhead divided by the budgeted level of the cost driver. At factory one, they're using machine hours and they estimate that they will work 1,250,000 machine hours during the year. During the period that they're, yes, it is year, during the year. And so when I do out that math, whoops, that's a decimal. So when I do the math, I come up with $14.80 per machine hour for factory one. Everybody okay with that? So go ahead and do the calculation for factory two, remembering that in factory two, they're using direct labor hours. And so for factory two, I took the $44 million that they have budgeted for overhead and divided by 800,000, which is the estimated level of the cost driver, the estimated direct labor hours that they expect to work in factory two. Okay. Now that's the yearly budget of 800,000. And the yearly budget of 1,250,000 machine hours. So obviously in 1 month, in the month of August, they didn't work anywhere near all of those hours or machine hours, because this is just 1 month. But we are asked then to apply the overhead based on these rates. Letter C starts with factory one. So when we apply overhead, if you think back to that handwritten diagram I have in Brightspace for you, applying overhead means we move it out of the factory overhead account. So that's a credit to factory overhead. And we move it into work in process. And the question is just how much do we need to apply? Well, remember, step two is we take the budgeted amount, $14.80 per machine hour for factory one, and multiply by the actual machine hours. So $14.80 per machine hour times 105,000 machine hours. We're going to apply $1,554,000 in overhead. $1,554,000 in overhead is applied to factory one. Go ahead and do factory two, please. Using the rate we calculated in part B times the actual direct labor hours.
So what did you say you found? Like, how you know to do that? To divide it by the actual,
Multiply by the actual.
or yeah.
Yeah, so in, I don't know if this is what you're asking about, but in Brightspace in the reference materials for chapter 16, here's step two. So we take the predetermined overhead rate that we calculated in A or B,
Yep.
and then multiply by the actual amount of that cost driver, the machine hours or direct labor hours or whatever this we're using.
Okay. Thank you.
Okay, so everybody good up to that point? Okay. So now we've applied in factory one, 1,554,000, but the actual total cost was 1,515,000. So we applied too much, right? We applied more than we incurred. And so for the last part here, we have to say, how close were we? So factory one, we applied $1,554,000. We incurred $1,515,800. And so we were off by $38,200. And it was, whoops, explain that in a second. It was over applied. We put too much in there. We're asked to determine the balance in the factory overhead account. $38,200. If we over applied it, and I know we're running out of time here, but I have just enough time to finish this, I think. So here's our factory overhead account. This is a cost account, so it's not an expense. You don't see a line item on the income statement that says factory overhead expense. It becomes part of the cost of the product. And so it is a cost account, which is very similar to an expense account, but it's part of the product cost. But it's similar to an expense account in that it has a normal debit balance. We increase it on the debit side and we decrease it on the credit side. So as we are incurring our overhead, we are adding them to the factory overhead account. So we're debiting them to that account. And then as we are applying them, we move them out of the factory overhead into work in process. So in this case where we over applied that account, what that would mean is the actual costs that went in, and if I can see the numbers here, what that means is the $15,800 is how much we put in on the debit side. And the applied cost, the 1,554,000, whoops, 54,000 is what we took out on the credit side or the right-hand side. And so this account would end up having a credit balance. If you were to balance that, does everyone see that? So it would have a credit balance. We over applied the overhead. We took too much out. We took more out of this account than we actually put in. And so now go ahead and do the last one. The actual factory overhead for factory 2 was $3,606,300. And the applied was less, $3,547,500. So the difference, $58,800, and this is the opposite. This was under applied. Our actual was higher than our applied, and so this account would have a debit balance. One last comment, and then we're wrapping up for the day. So as we look at this, the question becomes, well, what do we do with that? We know for factory 1, we put too much cost onto the product. In factory 2, we didn't put enough cost onto the product. So what it comes down to is we have to fix that. We have to zero out that factory overhead account at the end of the period. It has to have a zero balance. So we know for factory 1, it has a credit balance. So to zero it out, we're going to need to debit $38,200 to get that down to zero. The question is, what do we do with that $38,200? And the simple answer, because we're out of time, is it depends on whether it's a material amount. If it's more than 5% of the total, it's a little more complicated. If it's less than 5% of the total, we just add it to cost of goods sold or subtract it from cost of goods sold, because we hope at the end of the period, most of the product we made has been sold. The largest number that represents product cost should be on the income statement as cost of goods sold. And so it'll have the least impact if we put it on the income statement as cost of goods sold. If it is a material amount though, we have to think about where those costs are. They start in work in process, they go to finished goods, then they go to cost of goods sold. So if it's a big deal, if it's a big amount, more than 5% of the total, we're going to have to go to all 3 of those places, work in process, finished goods, and cost of goods sold, and fix it a little bit in each place. So we don't have to do that for this class, but you should know that that's what would need to happen if it was a material error. And that's where we're going to stop for today. We are halfway through. When I post the announcement when I get back to my office, I will tell you, because I'm not sure where the video breaks from the spring semester. So I'll tell you whether you need to start, at the beginning of the second video or 20 minutes in, or, watch the last 10 minutes of the first video. I don't know. So I'll let you know that in the announcement. Had to see how far we'd get today. Have a good week. As I said, if you do run into questions, feel free to email me or hold them till you come back to class on the 13th.